Hey everyone, welcome back to Corporate Decoder, the place where we dig into company filing so you don't have to. Today we're cracking open uCloudlink Group's 20F form. Normally 20Fs aren't edge of your seat reading, but trust me, this one has a few surprises. We will focus on the important parts and leave out the unnecessary boring details. First, what is uCloudlink? Think of them as a global SIM card for your devices. They use something called cloud SIM technology to let you connect to the internet in different countries without swapping SIM cards. Their Form 20F is basically their annual report and it contains a lot of interesting information, but we will focus on what's important. A big part of uCloudlink's story involves something called VIEs, or variable interest entities. These were entities in mainland China, but because of Chinese regulations, uCloudlink didn't directly own them. Instead, they used contracts to control these companies. They've now terminated these agreements. This could add uncertainty and risk, and we will dig into that later as it affects much of the numbers. The company has two classes of shares, Class A, which is what you and I can buy, and Class B, which are held by the company's founders. The Class B shares have way more voting power, meaning the founders have a lot of control. As of the end of last year, there were about 256 million Class A shares and 1.2 million Class B shares. This dual class structure is important to remember. It impacts the power of regular investors, and we will circle back to it later when we talk about risks. Let's dive into the numbers. For the year ended December 31, 2022, parent had revenues of zero, cost of revenues also at zero, gross profit at zero, operating expenses at negative $4.3 million, and net loss at negative $19.8 million. Okay, that was a look at selected financial data. Now the cash flow. The important thing here is this. The company has negative $333 million net cash used in operating activities, but positive 3.6 net cash generated. From financing activities, that seems concerning, and we will keep an eye out for it. We can also see in more detail in that same year that most of the cash was transferred as intercompany payments for purchase of data plans, raw materials, Wi-Fi terminals, and a transfer of equity investment. Alright, let's talk about risks. The report identifies material weaknesses in their financial reporting. That basically means their accounting isn't perfect and there is risk. They admit their internal controls aren't up to par. It is worth keeping in mind that they are in the process of working to fix it, but there is no guarantee if they can't fix it, that may cause inaccuracies in their financial statements, so there's a risk. The report also mentions the ongoing tensions in international economic relations, particularly between the US and China. If the US government imposes too many tariffs, this could impact their growth and might prevent them from selling products in some countries. This sounds like a macro headwind, but they will need to adapt to these rapidly changing political and economic scenarios, so we will watch out for this. Another risk is that the Chinese government might require them to get permission for future offerings. It is uncertain if the company can get such approvals in a timely manner. If not obtaining it, it could result in the value of their ADSs declining, and may even limit the ability to offer securities to investors or significantly decline the value of such securities. To investors or significantly decline the value of such securities. To investors or significantly decline the value of such securities. To investors or significantly decline the value of such securities. To investors, or significantly decline the value of such securities. As for the stock itself, uCloudlink warns that the trading price of their shares may be volatile. The business is subject to telecommunications regulations. They are operating in a globalized market where it is difficult and costly to evaluate the regulations. They are also subject to potential cyber attacks. These all increase the risks of investing in the company. Another risk the company points out is that mainland China's regulation of loans to their entities could make it difficult to use proceeds of any financing to make loans to their mainland China subsidiaries. And this in turn would affect their liquidity and ability to expand their business. Additionally, subsidiaries in mainland China are only permitted to pay dividends out of their retained earnings, and they face a requirement to set aside 10% of their after-tax profits each year in reserve funds. This regulation might hinder payments of dividends to investors. Okay, that was a look at key risks. Now let's get a better handle on cash flow data. They also conduct business with other companies, which includes amounts due to and amounts due from subsidiaries and former VIEs, which could have a lack of transparency and increase risks, but it does also seem like they have plans to change this. We can also see that they are affected by complex telecommunications laws. For example, the Hong Kong government imposed real name registration program for SIM cards, which is enforced in 2 phases. Complying with this many local and international laws may result in more costs of compliance, and we will keep that in mind. They are not spending much into purchasing property and equipment, with negative $411,000 USD used in 2022 and negative $162,000 USD used in 2023, and only spending a bit more than that in the last year, 2024. Let's dive into revenues and profitability. uCloudlink makes money in a couple of ways: services and sales of products. Services are things like data connectivity and their PaaS platform, which help other businesses manage their own connectivity services. In terms of percentages to revenues from international and local data connectivity services, the results are 30, 22, 2020, 2020, 2020, 2020, 2020, 2020, 2020, 2024. So the good news is they made a gross profit each year with $32.5 million for 2022, $41.9 million for 2023, and $44 ton for non-29 years in 2024. It seems like they are moving in the right direction. A mixed bag here. We can see that operating expenses have improved year on year from negative $51.7 million in 2022 to negative $39.3 million in 2023 and negative $39.3 million in 2024. They reduced research, administration, and other expenses while increasing their efforts into sales and marketing. We will need to decide if these decisions and improvements make it good value. CloudLink faces extensive and complex telecommunications regulations which are constantly developing and changing the business. Many of these laws are subject to change and uncertain interpretation, so it is important to review these risks. There is a fund transfer within the group between subsidiaries, the WFOE and the former VIEs, between 2021 and 2022, which involved millions of dollars. This indicates a lot of complex activity in a sector known for its government restrictions, as mentioned previously. They have positive cash and cash equivalents of $14.90 when $23.30, which is a great trajectory for the company. Paul, it's a mixed bag. Pineberry, well, it's a mixed bag. They are clearly growing with solid revenue growth over the past years. It seems promising, but they will need to continue pushing this narrative. Their cloud, SIM technology and expanding product lines do offer some potential for future gains. The reliance on their sales being mainly cross-border is definitely a weakness, and it should be noted their profitability really hinges on keeping costs under control, and it is likely they need further external capital, so they will need to handle this well. And the word of caution, there are risks here that investors should consider. Those material weaknesses in financial reporting are concerning. In my opinion, uCloudlink is definitely a buyer beware stock. The underlying idea is interesting and they're making progress, but this could be a company that goes to the moon, and it could also underperform. The best case scenario is that there's significant upside here, but it requires a high risk tolerance. What do you think about uCloudlink and their Form 20F? Is it worth the risk? Let me know in the comments below. Be sure to like and subscribe for more corporate deco content.